Let's bring in Scott Bauer. He's the CEO of Prosper Trading Academy, watching down at the SIBO, getting ready for those Uber numbers. Scott, what do you think here, man? You want to bet on this thing continuing its climb, or is Uber going to be more tied to the market's willingness to pay up, big froth?
I'm putting a position on Oliver that is looking for a move in either direction. Now, typically, my spreads, my trades that I talk about are always hedged, one option versus another, totally risk defined, which this is as well. However, something to me in the option market doesn't pass the sniff test. Volatility is too low, in my opinion, implied volatility, meaning that option premiums are too low. Yes, they're extended going into an earnings report like they should be, but they don't seem to be as high as they really should be. Market's pricing in about just a little less than 10% move on this print, higher or lower. Okay, so roughly 34 to the 40 range, somewhere in that range here. I can buy the 34 puts and buy the 40 calls, looking for a move in either direction for $1. Okay, $1, $100 each time I do that. And I'm looking for a move, an outsized move, greater than what the market is expecting. I just think that volatility is too low. When I look at the metrics, when I listen to what you and George were just talking about, all that makes sense. It's definitely in a bullish trend. It's been on the rise since last earnings. There's the highs up above were what, 43, somewhere around there. But who knows what's going to happen here? They have a lot of momentum behind them, but there's also a lot, like you guys mentioned, what's going on in the UK, some additional taxes, from what we're seeing right here in Chicago, that maybe is going to negatively affect the earnings print as well. So again, I'm doing this based on the fact that I think the option premium is too cheap going into this print.
So this is interesting too, because this still is looking for about a 9% move right now for Uber, according to the market maker move.
Right.
But there is a lot at stake. So I get the logic here. It's a company that for a long time since its launch just only went lower, and now it's finally got a rally over the last 3 months. They probably need to show some improvement.
Totally agreed. And again, this strategy by buying a strangle, buying the put below and the call above, honestly, I don't care what happens to the stock. I just need it to move. I just need it to move big in either direction. And I think that this strategy is very cheap. It's cheap enough to take that risk. And again, my risk is completely limited. I can't lose more than the $1 that I'm spending on this strangle. I think that's a really good potential for this earnings print.
Yeah. All right, Scott. So we'll be watching 37.27 for Uber. That means you're looking for a move close to the 50s or close to the mid-20s, basically. So if this thing swings, then you get paid out. All right, Scott. Broader market. What do you think of today's session so far? We've got equities trying to hold on to some green.
You know what? Before I get into that, let me just clarify on this play, on this strangle in Uber. By buying the 34 put and 40 call for $1, my break even is 33 and 41.
Okay.
So anything outside of that, winner. All right. Now, broader market, I actually like the action today. I'm glad we're not having a big follow through. I think to get back to some healthy trade in the market, getting back to some fundamentals, some technicals, we want to see a little bit of consolidation here. We don't want to see these big moves. So I think the trade today is good. I think it's very positive for the market.
Yeah, okay. We'll find out if it holds. Right now, pretty quiet session compared to some of the big blockbuster swings. We'll be looking for Uber this afternoon. Appreciate the trade. Scott Bauer, CEO, Prosper Trading Academy, looking for a swing in the ride-hailing leader.